Hey guys, this is Aaron Luttrell. Thanks for checking out the Aaron Advantage. I wanted to put this video together because there's a lot of people that I know are looking for some financial freedom in their life, and I thought, hey, who better to talk to than my buddy Erik Goodge. He is a fee-only investment advisor with Endress Capital Management, and this video's got some great information for how to go about getting the investment set up and some great information on how you can start right now to try to work toward that financial freedom. So check it out and let me know what you think in the comments below. Hey guys, like I mentioned today, I'm sitting down with Erik Goodge. He's a fee-only advisor who's going to give us a little information on some quick tips on things that we can do to be better suited for retirement. But first off, I'm going to let him kind of tell us a little bit about himself.
Thanks so much for having me, Aaron. I am a lifelong resident of the Evansville area. I went to Memorial High School, graduated in 2007, joined the Marine Corps. I got out in 2012.
Thank you for your service.
Thank you. And now I am working as a fee-only investment advisor for Endress Capital Management.
Okay, fantastic. Well, before we get into what a fee-only advisor is, kind of explain to me what was the impetus behind getting into the investment career choice, that path?
Sure. So I've always had an intense passion in investing in finance ever since I was a young boy. And when I turned 20, I started to actually look into buying stocks and managing my own portfolio. So this is a passion that I've held for quite a while and continue to hold. Now, when I got out of the Marine Corps, I knew I wanted to help people and I wanted to serve my community and do something that was fulfilling, but I didn't really know what to do. So I had this interest in investing in finance, and I had this interest in helping my community. And I got to thinking, you know, what is it that I see in the investment industry that isn't actually working well? What are people doing that they could be doing better? And so that's what really got me into being a fee-only advisor.
Okay, so now a fee-only advisor. Now I know there's probably a lot of people who may have not seen this, but John Oliver kind of did a skit on this where he talked about the difference between stockbrokers, financial advisors, and fee-only advisors. So can you kind of break down what a fee-only advisor is and what they do versus any of these other terms that are thrown around the industry?
Sure, and I would encourage the audience to certainly YouTube John Oliver DOL Fiduciary Rule. That is a fantastic video. More to the point, the biggest difference between a fee-only advisor and either a not a fee-only advisor or a stockbroker is that a fee-only advisor is held to what is known as a fiduciary obligation.
Okay.
So
now, I'm a real estate broker. I act as a fiduciary all the time.
Sure.
I understand what that means, but kind of break down what a fiduciary actually is so people understand that term.
Sure. So basically, I have to put my client's interests ahead of my own interests, and the way I do that is I disclose all conflicts of interest. I make it crystal clear any fees that the clients will incur. I make it crystal clear how I get paid. Basically, I'm obligated to make the best or offer the best investment advice for that client.
Perfect. All right. So now you say you're a fee-only advisor. What is kind of the fee structure? Because a lot of people, when they go and they talk to their financial advisor or some of these other people, they just know, hey, I give them money, they take care of this. They don't necessarily see a fee on top of it. So how does that fee structure really work?
Yeah, and that's really that's what I think is a big misunderstanding with fee-only advisors. They think, we got to pay this guy, whereas our stockbroker, we don't pay this guy anything. So that's kind of it's an interesting mischaracterization. But basically, the way I charge my fee is it's a 1% flat fee annually for the assets that I manage for my clients. So if you have $100, I'm charging you $1 a year. $1,000, $10 a year.
So as that portfolio grows.
So and you can see why it's almost in my interest to make the best investment decisions for my clients, because if my client has a $10,000 portfolio and I'm making with $100 a year on that portfolio, I want to grow that portfolio for my client.
Right.
Now a stockbroker, on the other hand, doesn't get paid by an annual fee. And by the way, that's why they call us a fee-only advisor, as we charge an annual fee. A stockbroker gets paid through commission. Now, these commissions, take like an actively managed mutual fund, for example, which is a very popular product.
Yeah, I remember John Oliver talking about actively managed mutual funds, talking about how there was a cat that actually outperformed an actively managed fund.
Yes, and that's literally true. That can be done, and it's unfortunate, but what these actively managed funds do is they charge a commission. The mutual fund company charges that commission to the client. They're usually about 5 to 6%, which is, you have to make all that back in the market before you even break even.
Right.
And they split that commission with the broker and the brokerage firm. So basically they're paying the broker to sell this investment to clients. And that's where the difference between an investment advisor and a stockbroker comes in. A stockbroker is selling you investment products. An investment advisor is selling you his investment advice, his knowledge.
Makes sense.
So a stockbroker will get that commission or a portion of that commission, but that's not the only cost that an actively managed mutual fund will charge you. There's also annual expense ratios that come right out of the fund, and they can be as much as an additional 1% to 1.5%.
Oh man!
They come right out of the fund. The client never knows about it unless they really dive into their statements, and let's be honest, who has time for that?
Yeah, that's a good point. The investment world in and of itself is kind of one of those things that isn't real sexy. You and I are young guys, so it's not something that people talk about a lot unless they hear the name Warren Buffett, and then they're just like, hey, Warren Buffett is the greatest investor of all time.
Right.
What's his take on stockbrokers and kind of the investment in these actively managed mutual funds?
So Warren Buffett actually has an opinion that I really strongly agree with. Warren Buffett advises people to look at what are called index funds. Now, you have these actively managed mutual funds, and you have something similar to them, but they're called index funds. Index funds are just products that are designed to match an index. So take the S&P 500 in the U.S. stock market, for example. The S&P 500 index fund will more or less, you can be assured, will more or less track the S&P 500 index. The way they do that is they have a fund that has stocks that are weighted to match the performance of the S&P 500. So if the S&P 500 contains, these stocks, then this fund will buy those stocks to match that performance. So that's not what an actively managed fund does. That actively managed fund, as you mentioned earlier, tries to beat the S&P 500, for example.
Right.
But the problem is studies show that oftentimes, more often than not, doesn't happen. And if it does happen, then the extra trading costs that fund manager creates within that actively managed mutual fund eats into the return above the stock market. So you're no better off than if you would have bought an index fund.
So basically what you're saying is, if I have an index fund where I'm paying a fee on that, you know what that fee is going to be up front, and that's set. It's not going to change. It's going to be a certain percentage. You know what you're looking at. Whereas these actively managed funds, there could be trading costs that I don't even realize are happening, that it looks like, hey, there's this great percentage return, but when I actually see the bottom line, I'm missing out because of those costs of them.
Basically the index funds can achieve the same thing with a fraction of the cost, and that's why I am a huge proponent of them. That's why Warren Buffett is a huge proponent of them, and that's why I think they're the best option for average investors like you and me. If you have time to delve through financial statements and make predictions about where markets are going to go, by all means, I'm not going to discourage you from doing that, but just know that statistically you're probably not going to do any better than the market at large.
Yeah, you said something there that's really important. You said an average guy like you and me. A couple young guys here, we're looking at stuff. I listen to a lot of podcasts, and I try to keep an eye on things that are going to help me in the long run. Just purchased a book by David Bach called The Automatic Millionaire.
Okay.
Where basically the whole premise is you pay yourself first. Doesn't have to be a lot. Doesn't have to be something hard to do. You set up an automatic payment to yourself first, and you put it somewhere to let it grow, so that by the time you reach retirement age, you have millions of dollars set aside. Is that kind of something you're talking about with this, or how does that work?
Well, you know, the premise of paying yourself first is a must if you want to reach your financial goals as soon as possible. Basically, what you're doing when you're paying yourself first is you're saying, okay, hey, look, I got, you know, I'm 28, I got probably 40 plus years of work ahead of me. After that, I want to live good. I want to do what Erik wants to do. I want to enjoy my time. I want to go fishing. Now, how do I achieve that? Well, the first thing I can do is not prioritize my short-term payments, my cell phone bill, my car bill, my you know, whatever bill that you have on a monthly basis over that goal. So how do you do that? Well, the first thing you do is you set up an automatic withdrawal with your bank. It doesn't matter how much money it is. It doesn't matter if it's $5 a month. That's not important. The important step is actually setting that automatic withdrawal so that you are saving for retirement on a regular basis, on a monthly basis.
Now, well, let's say that you're not in a position where you're thinking, man, I can't even do $5 a month. I've got this app on my phone that I've checked out. It's called Acorns. It's kind of like a micro investing app where anytime I spend any money, it rounds it up to the next dollar and it invests that.
Yeah.
Which, you know, when I first looked at it, I was like, oh, cool. This won't equate to anything. You know, I got about $1,000 in there already,
right.
And it's just amazing to me how quick that accumulates.
Right.
So, how can you use something like that to automate these things?
Right. So Acorns is an excellent application. I've used it myself. Just like you said, it rounds up your purchases to the nearest dollar. It is so the reason Acorns is as awesome as it is that it is so out of sight, out of mind. It's so cognitively easy, if you will, to just not even know that you're saving pennies here, pennies there. But they, like you said, they really add up over time. $1,000. I don't know how long you've been using it, but
that's about 18 months maybe. 18
months. So that's $1,000 that you've saved over a year and a half. That if you didn't have Acorns, would just be maybe in a change drawer or just who knows where it would be. So that's Acorns is an excellent saving application. I wouldn't rely on it for retirement, solely on retirement, but they are a very good product, and I encourage the audience to once they have enough money saved up through an application like Acorns or something like that, to go seek out a fee-only advisor so they can put that money to work towards their financial goals.
Okay, so this is kind of a lot of high-level stuff. I want to kind of break it down as simple as possible for the people who are listening so they can kind of understand, what do I need to focus on now to get started. So if you could give one simple piece of advice and just say, this is what it needs to be, what would that advice be?
I think it has three parts. Number one, pay yourself first. That has to happen. It has to be automatic. It doesn't matter if it's $1. It doesn't matter 50 cents. The goal is to bump that up over time. But you're not going to get anywhere if you don't pay yourself first. Okay. Number two, utilize a fee-only advisor. You want somebody who's going to be legally looking out in your best interest or for your best interest. And you can only do that through somebody who has a fiduciary obligation to you. Finally, number three is use low-cost index funds or mutual funds. Academic studies over and over again have shown that these statistically outperform actively managed mutual funds, and you'll save thousands, if not tens of thousands of dollars in the long run by just using them. So those are the three things that I would suggest people do. Again, that's pay yourself first, use a fee-only advisor, and invest in commission-free investment products.
Sounds good. So for everybody who's watching here, I'm going to link to the book I mentioned by David Bach, The Automatic Millionaire. I will also link to the John Oliver video that we discussed in the description to this video. And also I will link Erik's contact information. If you have any questions, what's the best way to get a hold of you, Erik, that the people can kind of reach out to you for any investment questions they may have?
Sure. I can be reached at any time of the day, 24/7 at 812-499-5252. I can also be reached at egoodge at endresscapital.com. That's EGOODGE at Endress, ENDRESS capital.com. I am always answering phone calls and emails. There's not a bad time of the day, so feel free to contact me.
Well, I really appreciate your information here today. Like I said, we'll link to all this information for you guys. Thanks for everything you've done.
Thanks for having me.
If you like what you've seen here, be sure to like and subscribe to the video. Share this information with anybody you know who's thinking about getting into investing. This is great information to have, and it's definitely something that I wanted to get out there. Also, if you have any questions, feel free to let me know in the comments down below. I'd love to answer your questions and start a conversation, or you can let me know about any other topic you'd like to hear about. You can reach me anytime at 812-779-6273 or find me on Facebook at facebook.com/theAaronAdvantage.